In this video, we're going to be taking a look at the bellwether stocks here on our Friday and reanalyze the markets a little bit and take a look at what we can expect. We've been waiting for this market to come down and give us this ABC pattern off of the top, off of this nice big long beautiful Elliott wave pattern that we've been following. I hate to say I told you so, but I told you so. As this market started to drag back up on that X1SA1, it failed just like we anticipated. So it's just a low probability of success. I was a little nervous in there. I thought that maybe we were going to be, get an A1S that took off, or an A1 this time that take off and then go to the moon. But the numbers are coming through again, just like usual, and down they go. So this A1S is failing on us once again. So I put a little bit of money into Amazon, a couple of these little markets, just to kind of put a little testers in there, little starters. So my powder's still dry, still waiting for this market to come down. I want to see it come down and break down here into the Fibonacci sweet spot once again, possibly down into the 61.8. Then I want to see that A1 at X2A1, X2SA1. That's where I want to start looking to put some money back into the market, start dripping our money back in a little bit, but it's still on the downtrend, so there's still no rush, there's still no hurry. And you can see down here on the CMF that we're coming down, starting another green section down here. This is the buy mode. This is where it says you can start to buy if you want to, but it's still coming down. So as it comes down, keep your powder dry. We're going to wait for it to come down until we get that CMF start to turn and start to go back the other direction. Once it turns and starts to go back the other direction, that's where we want to start adding in, and we'll be into that X2SA1. X2SA1, we can start putting a little bit of money back into the market in anticipation of a rise. And so that's what we're looking at here on Apple, and that's what most of these bellwether stocks are about the same. So keep your powder dry as we start looking for this market to come down and start to roll off the bottom of this chalk and money flow. This is the accumulation distribution model by Richard Wyckoff, and so that's what we're trading, and that's what we want to follow. That's the model we're following, okay? And so this right here is a nice little strong area of support. You can see it's right at the 61.8% projection level, and we're looking for it to break that 61.8, come down and hit 100. If it hits 100, that would be a 61.8 retracement on the Fibonacci calculator on the full retracement. So we got the projections and we got the retracements, and so those are the two numbers right in there. That's where we want to start looking to accumulate, watching that chalk and money flow. Let's come down here to Adobe. Again, same thing. We're coming in here with a little head and shoulders top formation. We'll just draw that in there for you so you can do this on yours. Follow along, and then we're going to come down. This is going to be our neck. We probably get a little bit of a rally up in here, right shoulder. And then, of course, if this follows through with this right shoulder falling, it should come down. And then we're going to go with a 50% retracement here. And this is a strong market. Adobe's not breaking like the other markets. And so if Apple, which is going to be our kind of our canary, right? This is our yellow canary. If it starts to rally and starts to move hard once it gets down into this region here, this is my buy zone for Apple. I'm going to start to accumulate right in here. I want to see it break this flat bottom and come down into this region, bounce off that 100 or the 61.8, and that's where I think we'll see it turn and start to go up. It could always make a third drive. It could do one of these things in here. It could come in and go like this, 1, 2. It could rally back up, get us all excited, and then dump one more time. So again, even on this first one, we're not going to dump our whole cash wad in there. We're going to start dripping money back into this market down in this region and do some dollar cost averaging. So Adobe, if it comes down, it may kind of follow Apple and may stay strong and stay up there. And that's why I'm pointing that out on Apple or on Adobe. So we come into Amazon. I put a little bit of money into to Amazon thinking that we might get a little break because it had such a strong earnings, but it's being pulled down and weighted down by the rest of the market and by Apple and some of these other markets. So I'm sitting on a little bit of a drawdown right now, but the position was so small it was almost irrelevant. I'm still going to look for and wait, anticipate down here in the chalk and money flow. We're going to be looking for this thing to come in and give us some more big nice green bars down in there, and that's where we'll look for this thing to turn just very similar to this pattern right here. This is what we're going to be looking for before we start dumping money back into Amazon. So we got Boeing. Again, Boeing's coming down. It's breaking down hard off that ABC top formation. We're going to come in here and just draw this ABC pattern in there. And you can see right now we're coming down on the golden ratio. Now remember, we have two golden ratios. We have a 61.8 golden ratio and we have a 130.9 golden ratio. So those are two golden ratios on the Fibonacci scale. One is for the retracement, one is for the projection, and that's right there where we're at right now. So we're 130.9 is the golden ratio on the downside. And so if you come back and look, if we just draw an area of support, remember we talk about areas of support, not just simple lines, but there's kind of an area of support. Now that market comes back down in there, and you'll notice we're going to watch that chalk and money flow very carefully, because it's going to turn and start to come this direction, and when it does that, that's a buy signal for you on Boeing. All right, so we're going to come in here and Caterpillar, we're still waiting for it to kind of die. It's being strong, but Caterpillar, we're looking for it to die a little bit. Now Kramer sent out an email and he had us look at John Deere. And if I come in here and just type in my DE in here for John Deere, you can see that John Deere has been having problems. Now they're farm tractors, right? But they're very close in similarity to Caterpillar. And John Deere is dropping like this because they've, they're struggling with producing their tractors. And so we've had this nice little ABC pattern up. We got a little 1, 2, 3 top formation off the top. This is your little pullback, your fall, and then right down here to the 200%. We got another little pullback in here. So this thing's coming up, and it's making another little down pattern down in here, and we'll look for this thing to bottom out down in here. I want to see it test down in this region here. You can see again the chalk and money flow is starting to come down into the lower region, and Caterpillar and John Deere are having similar problems in that they're not able to produce this big equipment. And the problem that we've got is, I want to just kind of point something out. The Fed chair came in and said the stupidest thing the other day. He was speaking about not raising interest rates, but that they're going to probably raise them again before the end of the year. And then he went and some reporter raised their hand and they said, well, how's the price of crude oil affecting the economy? And does that have any effect on the inflation? And he said, oh no, the price of crude oil doesn't have any effect on inflation at all. Are you kidding me? Are you kidding me? The price of energy doesn't have any effect on inflation at all, and the cause of all these big factories and companies and struggling because of energy? I mean, you name one thing that we buy that's not affected by the price of energy. And the price of energy is going through the roof. I mean, we're going to be looking at crude oil here in just a second. Crude oil closed at $90 today a barrel. $90 a barrel. Remember when it was at zero? Wasn't that long ago. I remember it just like it was yesterday. So $90 a barrel, and he says, oh no, crude oil, the price of crude oil doesn't have anything to do with inflation. Are you kidding me? Everything is priced. So anyway, I don't know. It leaves me speechless. And so here we are, John Deere struggling to, for the farmers to upgrade their equipment, buy new stuff. And, John Deere is really actually more of a big financier. They finance a lot of their products. They're almost like a big bank, but they're not selling their equipment. So down they go. So that's what they say. All right, so this is the situation that we've got here, and I'm going to be looking. I like John Deere's a good company. We're going to be looking for some opportunity to buy low, sell high, and once this thing comes down and starts testing these lower regions down here, and we get the CMF, the chalk and money flow CMF start to turn around, we're going to start buying ourselves some John Deere. All right, so we're going to come in and look at Google. Google's coming in here. We're giving a nice little break off of this little trend line. This is almost a total reset right here. So I'm looking at this as being drive 1 and drive 2. So this in here to me is drive 1 on Google, and this is drive 2. Are we going to get a drive 3? That's what we're going to be looking for here on Google. So this would be drive 1, A, B, and we're going to look for this thing to come down, round out a little bit down in here, and start to rally once again. We're going to come in, draw our little circles in here. This is what we're going to look for right here, one of these. We're going to look for it again right in here. Once it turns around, starts to go back up, we're going to look for that third drive high. Now whether it goes up, breaks all-time new highs, and keeps going to the moon, that's another question. We need the rest of the market to turn with it and start to drag those things back up. So Intel, we're coming in here, same thing. We got kind of a rounding top up in here, and the question is, where's it going to go? This market has a lot of, if we go out, I would like to pull up, I like Intel. Intel is a great company. If we go out to a weekly chart, I want to show you a weekly chart. This thing's got a lot of upside potential. So I'm just going to draw a couple of trend lines in here. This is our nice little trend line coming up the bottom side. We might get a little bit of a bounce or an ABC pattern in here as we come in off of this markup, and that was good because it's going to give us the opportunity to buy some more Intel at a lower price. And so we're going to look at getting into Intel and taking this thing back up once again. If we went to a 50% retracement level, we could just draw our 50% ruler in there. And we're down here almost touching, we're at 38.2 right now. So we're coming down into the Fibonacci sweet spot, which is between 38.2 and 61.8. That's where I want to see the CMF come in. Once again, start to turn a little bit green down in here so we can start buying and accumulating some more shares of Intel and start looking for that market to rally. We're going to come in and look at Johnson & Johnson. Johnson & Johnson is giving us a clear indication that we got another leg down. So we're going to come in here, A, B, C, and we're going to look for this thing to come down and test these previous lows. I'm going to draw a couple of areas of support across here. So if I grab this little tool right here, you can see where we're going to look for this market to come down to, and we won't be buyers until we get back down into here. You can see we got a nice big pull down on the green bars on the chalk and money flow, and then I'm going to look for this market to come and drop one more time down into this red zone, and when it does, we're going to watch for the chalk and money flow to start to turn and curl, and that's where we're going to want to start to be buyers down in here, and that's Johnson & Johnson. So let's come in and take a look at Meta. Meta, very strong. Has a lot of money. Apparently they're doing quite well. They made a good recovery from that last big blow off down there where they were selling everything off, and now the market's starting to come in here, and we got our nice 3-drive pattern on the Meta right here. We actually, if you go back a little further, it's a little bit more than 3 drives. I think we ended up with 4 or 5 drives, but now we're getting our little ABC top formation in here, and it's shallow. It's a very shallow ABC top, which shows strength to this stock. People don't want to get rid of it. They think it's still good, but we do need to see, for us to buy into it, we don't want to be buying clear up here. We want to wait and have it come back down where we can buy into it. We may not be able to see this thing, we may not be able to get into it for a little while. We may not see it come all the way down to 38.2, 50, clear down into this region here. This is probably not where we're going to see this market. My goal is to more see it come down and at least test the previous lows right down in here. If we come down in with this area of support right here, this is more of a target zone. I'd like to see it break below. I'd like to see it break down below here, and then we can see it start to rally, and we might want to start doing a little accumulation on Meta once it gets down into this region here. And so we'll be watching the chalk and money flow right down in here, and if it doesn't ever come back down in there, not real anxious to get into a market that's that high. I want to see it pull back, give us an opportunity to buy low and then sell high, and we'll start dripping into it if it can come back down into this region here. So we got Microsoft, same thing. We got that ABC top formation. We've talked about this one. We got the spider web drawn in there. We just crossed the blue lights to the downside. We're looking for it to come down into that sweet spot of the Fibonacci ruler, and we're looking for it to bounce off that 61.8, and we're again just going to watch that chalk and money flow for the reversal, and that's where, because this is going to be an X2A1, we can start dripping into this market. So we're going to be Netflix, same thing. We're going to be watching for this market to come down. We're going to go off of the 50% retracement. I'm going to draw that in there for you because it's not there right now. So we're going to come in off of this pretty far back low all the way back here into March 14th, and we're going to draw that thing in. You can see we're right at the 50% retracement level now on Netflix, and so once this thing comes down and rounds out, this blue light should come in here. This is going to be an almost looks like an X3A1, doesn't it? X3A1 is our highest probability to the probability upside. So we can start dripping into this market here. I'm going to watch this chalk and money flow right in here, and you can see it's the pattern that we're looking for. We want to see that thing stop going down and start to turn, and it should turn right around that 61.8. Those blue lights should intercept right there, and at this point we can start dripping into Netflix and start looking for Netflix to rally once again. We got NVIDIA. NVIDIA is giving us just the first leg off the top. So this is our head and shoulders formation. We're going to come in here. That's the left shoulder. This is the neckline right here. This is the head. It looks like the head's right there. And then we're going to get this next neckline right down in here. We'll get a right shoulder, and we'll get a bounce. And again, this is going to be one of those markets that's so strong. It's showing so much strength up here. I don't know if we're going to get a full bounce down and break this neckline. That's what I want to see it happen, but NVIDIA is such a strong company, we may see it break here, and there could be just a little bit of a sideways wandering here as the rest of the market starts to turn and curl and start to rally. If the rest of the market curls and turns and starts to rally, this NVIDIA may not pull back far enough for us to get down into the Fibonacci sequence area to start dripping in. We may have to, if we're interested in getting into NVIDIA, it might be a little bit of a higher level than what we might normally want to be looking for. I'm going to come in here and just quickly, wow, that thing is so far back. I don't really want to even draw. We could draw from here. We're going to put in a couple of Fibonacci rulers. We'll put one in here and we'll put one right in here. And if we look at the shorter term time frame on this Fibonacci ruler, you can see that we're almost there right now on the 50% on the shorter term time frame. I want to see it come down just a little bit more on that shorter term time frame. We'll draw that out there. You can see we're almost bouncing off the 50% level of this last major move right here. Nonetheless, that's still an X1A1. It's a low probability of success, so we want to see at least an X2A1 before we jump in. So let's go to PayPal. PayPal's down here. PayPal. I don't like PayPal. I mean, me and PayPal, we're not on the good terms. We lost some money on PayPal last year, and I still haven't got over it. So PayPal, breaking down, this is an X1A1 right here. X1A1, lowest probability of success. It failed, and so we're coming into the, this is a B1. So a B1S to the downside, we'll look for an X2 to the upside, which is going to be the second exit. A1 will be an A1. So X2SA1. If you're not sure what I'm talking about when I'm talking about X1, 2, SA1, and all of these different probabilities, you can go look in my book. It's on Amazon. Just search Lan H. Turner, and you can get in my book, and it shows you all the probabilities of what these different turning points are based on Elliott wave and Fibonacci sequences. And that's how we know where it's time to be getting in, where it's time to be dripping into the markets, what the probabilities are, and where the highest probability turning points are, and why not to get in on some of these lower probabilities. Saved us. We've been saving ourselves some heartache by not getting in on some of these low probability turns, and you can find out about that in my book on Amazon. So if you haven't got that book yet, jump on over there and pick that up, and we'll come down to the next one. PayPal. This is, if we come down here, let's do a Fibonacci projection off of the top of PayPal here, AB, and this is our C right here. And so we're going to expect it to come back down again, once again, down into this region here between 61.8 and 100. 130.9 would be nice down in here, but this is where we might start to be a buyer. Again, we're going to watch that chalk and money flow. We want to see it come down, bottom out, and we can start to drip into PayPal again once this thing turns and starts coming down, because this next turn down here will be the X2A1, which is, you know, not the best. X3A1 is the best, but X2A1 is good enough to start dripping some money in. So we come down here to the Qs. The Qs, that's our X1SA1. As we come down, we're just going to take our Fibonacci projection tool, come down A, B, C, come in here, and we're looking for it once again. It's going to match up with this Fibonacci sequence right in here. We're looking for this market to come in here before we start really getting serious about putting a little bit of money in here. It's coming down right now. I'm going to start adding a little bit. I'll start dripping a little bit of money back into the Qs as it comes down and tests this low point right here. But it should probably come down there and bounce. I don't know how far through it'll go. We'll go like this. If we do the Fibonacci bow tie, it should come all the way down to 130.9. That's where we want to see it, or at least 161.8. I don't know if we don't want to see the market fall that far, right? But if it comes down, we want buy low, sell high. Give us an opportunity to get in and pick up some of this stuff relatively inexpensively. So since that's X1SA1, the next turning point will be an X2SA1, which is a good place to start dripping in. We just don't know where it's going to turn until it happens. We got the blue lights coming in. That will be our intercept, and that intercept should occur at the same spot as where these green bars from the chalk and money flow start to turn and come around. If we get a little spot like this, and it turns and starts to come down early, make sure you line it up with the blue lights. Those blue lights have to be matching up with the peak of that chalk and money flow, so don't get caught in a little tiny ABC pattern of the overall run, and that'll be reflected on the blue lights crossing over at the same time as the chalk and money flow. That's what we need to see. We need to see those two converge, and that's where you get the breaking point, and that's where it's okay to start to buy once again. So same thing with the SPY. I won't go into it in great detail in the interest of time, but it's basically the same thing. And then we got Tesla. Tesla's coming in here. I was feeling bad about Tesla. It come and broke. It gave us that little triangle wedge, popped up, Now it's coming down, and it's following. Even though Tesla is a great company and I thought it might break all the rules, it's not going to. It's going to stick to the same old rules just like they've always done. And there is our break right there. Broke those blue lights. That's our spider web, and we're coming down and testing the next leg on the spider web. And then we're going to come down. I think we're going to come down and see this thing roll out through the bottom, and we're going to get another opportunity to buy some Tesla at a low price down in here. So we're going to look for the same thing. It's just that same pattern. We're going to come down and look for this chalk and money flow to round out the bottom. They got to match with those blue lights. When those blue lights cross at the same time as the chalk and money flow starts to go up, we can start dripping into Tesla, start accumulating some shares and looking for the market to come in. This is the X1S A1 right here, X1S A1. Low probability of success, and sure enough, it went up and it's failing. It's coming in, and that's our B1S to the downside. So that we're going to look for that thing to come down here, test this previous low, watch those green bars turn, watch the intercept of the blue light, and at that point, when it starts to rally, that's our buy signal for Tesla. I'm going to come in and show you the USO. USO, actually, this is United States oil. This is crude oil. It's an ETF over here in the stock market. If we're going to trade crude oil, we generally like to do it over in the futures market because it is a commodity. But this is just an ETF of oil, and I wanted to show you that it's at $80 over here, but it actually closed over in the futures market at $90 a barrel. $90 a barrel. So we're back at $90 a barrel. This is our drive 1 and 2. So drive 1, and this is our counter trend right in here. You can see our nice little counter trend coming through, and this is drive 2. And so markets oftentimes have 3 drives. I can't believe that crude oil would go higher than $100 a barrel, $90 a barrel. It looks like to me it's trying to come back down and fall. I don't know if we can get it up over $100 a barrel. Not that I want to see it go up there. Gas is almost to $5 a gallon here in my city, and so just crazy. Of course, we know this is driving season. It's the fall season. People like to go drive their cars around a lot in this time of the year, and we generally do see higher prices this time of the year than going into what we call driving season because everybody's going on vacation, right? And they want to go on vacation before all the kids go back to school. Now, the kids have already started to go back to school, so this should start to level off a little bit. So who knows if we'll get a third drive out of here, but nonetheless, at this point, we can look at it as an ABC pattern coming in here, or even our head and shoulders formation if we anticipate that we're not going to go up into anything above $90 a barrel. If it comes down and tests this previous high right here, that would be a Fibonacci bow tie, and then we might get that right shoulder back up in here, push out, and then hopefully off that right shoulder we'd see the drop, and we wouldn't see another rally up in the third drive and go up into the $100 and $120 per barrel range. But this is kind of the pattern that I'm anticipating. We'll see this market maybe fall back down a little bit and then rally once again. Again, this is our target to the downside because this is the Fibonacci bow tie, so that previous high right in there would bring us right down into this level here, about $75 on this ETF here, USO. All right, guys, that's just a quick rundown of the things that have come to that are on my radar right now, and I wanted to share those with you. I know I went a little bit fast today, but a lot of it's just kind of reiterating the things we've talked about in the past as we wait for these markets to come down and make their next leg down and give us an opportunity to start buying low once again and sell high. I like to buy low, sell high. I don't like to buy high and sell higher. That's a lot more difficult, and so let's wait for opportunities and look for stocks that are buy low so we can sell them high. Don't buy the high probability X ones. Let's go ahead and make sure we're getting into those X2s and X3s before we start to look to go long. We don't want to buy those low probability setups. We're more interested in high probability setups, and if that means you don't buy your favorite stock, well, don't fall in love with your stock. Go find something else that's giving you a higher probability of success, and you'll be much happier, and maybe you'll find another stock that you love instead.